It's a historic day for D Street as the Sensex has hit 75,000 for the very first time. 75,000 is not just another number but a milestone that we are celebrating. But what is next for the Sensex? Where is the Sensex headed from here on? How should you be approaching the stock markets at these record high levels? Is there still enough opportunity for you to make money in the markets? If these are the questions that are bothering you, well, you are at the right place. Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and joining in on this special edition are two very special guests with me on the show to help us understand what do we expect from the markets from here on. Abhishek Basu Malik, the founder and chief equity advisor at Intel Sense Capital, joins in, and also with us on the show is Kshitij Maharjan, the CEO of Complete Circle. Welcome to both of you, and thank you so much for taking the time out, and many congratulations to both of you that we are witnessing another historic level in the making as Sensex hits 75,000. Before we go ahead and understand from both of you, what is next, what are the key factors that are supporting this rally, and all of those data points that are important, I want to first begin by understanding which is the earliest level of Sensex that you remember tracking in your lives. Abhishek, let's start off with you.
First of all, good afternoon to all your viewers. Definitely a historic day. Every such prominent markers on the index tends to be pretty historic, something we remember. I started in the year 2000, so I don't know, I don't remember the exact number, but I vaguely remember that Sensex was below 4,000. Nifty was around, I think, 1250. So
Wow.
in the morning when we hit 75,000, I was just sort of calculating that in the last sort of 24 years, Sensex is up 20 times, roughly. I mean, so, great going actually.
Wow, 4,000 as a level of Sensex that you remember. Kshitij, what about you?
Somehow there were a few members in the family who used to trade, and I remember Harsham at the time. It fell
Yeah.
down to 2000. So I remember some chats at home, what was going on, and I still recall that how that time was. So and it's after that I was preparing for my MBA around 99 2000, and I still remember that it was around 3000 some odd level as said by
Wow.
Abhishek, I think close to somewhere close to 4000 levels before bubble burst again happened, and again it fell down. So we have seen that journey. And just for information, Sakshi, when Mr. Vajpayee lost election in 2004, Sensex fell from 6,000 to 4,200 again. So I've seen these levels again and again in a span of 5 years, and then we all saw the biggest bull run, I must say, from 2004 to 7, 8 onwards, where we have seen that rally from back from 4,000 to 21,000 level. And again, GFC happened and fell down to 89. So, I think that volatility is a part of index, or is a part of capital market. If it is not going to remain volatile, it will die. So, but yes, eventually it goes up. That's what the message is. And congratulations to you and all viewers.
Thank you. And just to give out some interesting data points to all our viewers to really understand how this rally has taken shape up until thus far before we go ahead and ask about what's next. So Sensex has taken 24 sessions to rise from 74,000 to 75,000, and it has taken around 80 sessions or about 4 months for Sensex to move from 70,000 mark to 75,000 mark as well. In the month of April thus far, we're just about 9 days from the start of this entire month. About 1.9% of a surge is already what we have seen on the Sensex, and it's also extending its rally for third consecutive month. The index crossed also. We do know that for the year-to-date level, we've gained about 3.9 odd% on the index, and in the last 1 year, of course, 25% of a surge is what we have seen. So these are some interesting data points that I wanted all the viewers to really understand. But Mr. Basu Malik, to you first. Tell us, this stupendous rally that we've seen unfold from 71, 72, 73, 74 and 75. It's happened in such a jiffy. We've hardly got time to really fathom all of this sharp surge over the last 1.5 years odd. how would you really explain the kind of factors that are behind this surge in the markets?
See, first of all, we should not get very excited when we are moving 1,000 points on the Sensex, because if you look at it as a percentage, it is very low. It's less than probably a percent and a half when you're moving 1,000 points on a base of 70, 75,000, right? So it's not a big deal that it sort of goes up over a period of time. So that is bound to happen. What is, I think, more important to understand is that Indian markets over longer periods, has been trending upwards, which is what is important for all investors, traders, people in the markets. And we've got a lot of newcomers in the market post COVID. So the only point that everyone needs to remember is that we are a growing economy, and today 75,000 Sensex, 10 years later, this is going to be multiple times of this. I mean, it will probably be much, much higher. I mean, it's not far ahead when we have, 1 lakh or 2 lakhs, we'll see on the Sensex.
So by when? By when do you anticipate it? Like, logically, calculatively speaking also, by when do we see 1 lakh and 2 lakh coming?
A very difficult question to answer. Like Kshitij said, we'll be seeing ups and downs. But I mean, if you take a nominal view, right, we've been growing at roughly, say, between 14 to 15%, over the last few years, inflation plus real. And so what happens is, if you just take that, rate of compounding, you're bound to do well over the next 5 to 10 years. When it will double, it's I mean, precise timelines, nobody knows. But the main point is that we are headed upwards. 1 lakh will come and go, 1.5 lakh will come and go, 2 lakhs will come and go. Our job is to remain invested, look for opportunities within this market.
Okay, our job is to remain invested as a key point that I'm holding on to. All right, Kshitij, to you then, at 75,000, are nerves stepping in now? What should investors really do at this point in time? Like you said, of course, we have seen volatility in the past. Is this time, at 75,000, do you see that, of course, we have run up too sharp and too fast, and now there should be some sanity in the markets, or do you still feel that there is a lot more to go before we settle lower?
That's actually just to give and share some data points. From the low of 59,000 level of Sensex in April 21, we are 26% up in 2 years' time. So, and it's good to see new highs, and I think rightly said by Abhishek, just a beginning of what India is seeing now. I've just come back from my foreign, business tour, and I can tell you one thing very clearly, that there's too much of noise about India. Not only Indians, but people settle outside India. They're looking at India, how they can come, they can invest. Great, there's a gift city route now. They can come through that. So I think at this level also, whether this level of 5,000 less on Sensex or 5,000 more on Sensex, the right way to invest is through a staggered manner, where you see a valuation gap in terms of, let's say, the earning number as well as the multiple which you're getting on that earning number. If there's a valuation gap, then just go all in. Otherwise, where you see that there's a gap in terms of the price which you are paying for the earning which you are getting, if the price is high, then I think staggered manner is the right way. So if you are all time into equity, you understand equity well, you do good research, then maybe you can do it yourself. Otherwise, take a fund route. There are various platforms through which you can actually achieve this financial freedom. There's a mutual fund platform, PMS, alternate investment fund. You can choose depending on what suits you. Otherwise, I'm saying this is a market because it's been 4 years of bull run. If you actually see Sakshi from 26,000 low, we are at 75,000. I'm talking about 24th of March 2020, and now in 4 years' time, we have almost tripled the markets. Yeah. So I'm saying now it looks that it's much easy, but it's not how market works. Right? So many of the new investors who have come in the market, and congratulations, they have seen the better side of the market, and I wish that they keep on seeing this. But you have those flips, ups and downs coming your way, and that's very much character of a market. So my sense is at this level also, pick your right pockets, look for the valuation, And if you want to do it yourself, then do in a staggered manner. Otherwise, fund route or PMS route also do in a staggered manner. There is no need to rush, as markets have done well. Market is discounting a lot of things in the election. Numbers seems like are going to be very good for Q4. What has been anticipated and what numbers have started coming, one can see from the auto sales. So my sense is that a lot of things have been discounting. That's why the markets are rallying up, and that's what it will keep on doing. But yes, you have to do a staggered investment. That's the right approach.
Okay. Abhishek, I also wanted to get your sense on the key factors, just how Kshitij has highlighted what has worked for the markets thus far, but what from here on? Which are the 2 or 3 factors that you believe on the back of which the markets could continue to show us an uptick?
See, first of all, I think, like Kshitij mentioned, there is a huge amount of interest for Indian equities outside India. I've been reading, foreign newspapers pretty much for the last 7, 8 years, and I have never seen the kind of positive uh, stories that are now coming out on a regular basis. Say whether it's a Wall Street Journal or a Financial Times. Uh, it never used to be the case earlier. The positivity with which our markets are now being put. The other factor is that if you look at what the corporates are saying, global corporates, everybody now, all the CEOs are being questioned by their boards in terms of what their India strategy is. So, as a professional CEO, if you don't have an India strategy, whether it is manufacturing or producing something in India or selling in India, then you are out of place. So
Oh.
my sense is next 4, 5 years, we'll see a lot of FII, FDI, all of it coming into India, plus the domestic flow, which is extremely strong.
Okay. So, Kshitij, any 2 or 3 sectors that you believe are likely to outperform starting now? We've, of course, seen sectoral rotation over the last 1.5 years odd. Several themes have emerged. But in continuation, will the earlier ones continue? Will newer sectors emerge as dark horses? How are you really looking at sectoral or themes that will be now performing?
No, so actually, I agree with what Abhishek has said. In fact, just to add to what he said, there's a retail inflow of almost 20,000 crore in SIP, and then you have EPFO, you have insurance companies putting in money. So we have a visibility of $4.5 billion coming every month. So for market to fall, you need to sell more than that in a month. And you believe me, this is just a beginning. We will see this type of flow maybe on a daily basis coming next 4, 5 years time. We have hardly scratched the surface. Only 4.5 crore people are participating in equity market. I'm talking about unique PAN which are participating.
Yeah.
On the sector side, thing is that we are just holding on to themes which we have been holding for the last 2 years, and we see that energy theme should do very well. A mobility theme, as in passenger vehicle as well as in railways, as companies which are in the same business will do very well, as we are going for overhauling of our railway system as well as EVs catching up fast. So that thing will do very well. In fact, the type of scope which we build when you look at a sector is that you always do or maybe map a value chain while looking for the businesses. What are the key components involved in that value chain, and which companies are making that key components? And then you shortlist and zero down on that. So these are the 2 things which we are very bullish on. Defense is something which self-reliable, which India is becoming, and I think will become we have become net exporter now. In terms of we are clocking to achieve 5 billion of total defense sales by 2025. That's the third sector which we are looking at. Fourth, very important part is financialization of saving. That is something which we feel that is going to really do very well. Before COVID, we were having 4 crore unique Demat account holders. Now, in 4 years' time, we have 9 crore unique Demat account holders. So many companies which are in that business of RTA or business of asset management should do very well. Similarly, mutual fund folios also. So we have unique 55 crore PAN which are linked to Aadhaar, and the participants are only 9 crore on a higher side in Demat, and in mutual fund only 4.5 crore. Just look at the journey which we are going to go from here, and I think people are realizing that it's of no use to participate in Ponzi schemes and things like some committees and all. So you will see that transition of what has happened in GST, transition of people coming to organized investing will increase. I've been meeting youngsters, and believe me, many people will say that they are not a serious set of millennial and Gen Z, but I find them very very interesting, and they are looking at investing.
So any particular stocks that from the sectors that you've highlighted where you're bullish on that you could highlight for our viewers? What kind of stocks would you be looking at adding even now?
So in our PMS, I will just say, and there is no recommendation. These are part of our PMS. On the mobility side, we have Titagarh, we have KPIT with us. We have Tata, Tata Consumer on the consumer side. We have with us. Then on power side, we have Tata Power. We have Reliance Industries. On clean energy side, these are the companies. We have CAMS and CDSL on digitalization of savings or financial savings. We have these two companies. On auto mobility side, we have Tata Motors and Mahindra. These are part of our portfolio, where we see that the upside can be really very big. Now, there are OEMs also which we are working on, because one can look at participating directly with auto manufacturer, and then there are OEMs which are getting benefit also. So we have Uno Minda, Sandhar Technology as part of our portfolio. So I'm saying these are our portfolio stocks. For all viewers, there's no recommendation we are giving here, but I'm saying we are looking at businesses to do well from here onwards also.
Sure. Abhishek, what about you? Key sectors where you're bullish on now, and where also you can give us, a sense of caution. A place where you feel that too much has happened, exuberance is there, frothiness is there. So investors should also be aware of the pockets that could be now dicey to be in.
So I think, see, one good thing that has happened over the last, say, 6 months is there's been constant sector rotation. So by that, what has happened is there's no one sector or one set of stocks which have continuously run up, which is a good thing. So for example, say railways or PSU banks or defense, they did extremely well for part of last year, and then a large number of them have actually sort of consolidated for the last few months. Right. Similarly, some other sector is picking up and taking it forward. So that sectoral rotation is good for the health of the market. What I am personally bullish on, I think, so again, I'm taking a slightly longer term view. I think the bigger themes that we need to watch out for are manufacturing and the pickup of manufacturing in India on a very large scale. Right, we're just seeing glimpses of it with Apple and others. So that probably is a trend that is going to accelerate much more in the next decade. The second one is when we talk about the transition economy, one of power. So we are moving away from fossil fuels to renewables to nuclear. In addition to that, we are also looking at migration of ICE engines to EVs. And maybe also hybrid. So that is again a major disruption in terms of how which companies will benefit. So a lot of players to pick amongst these sectors. Real estate after a slump again has picked up. I think now inventory levels across the country in the larger cities is probably at the lowest, and so it is expected to do well. So all of these are very large sectors, right? So autos, real estate, they're very large sectors, have a large number of players, also have ancillaries. Whether you have auto ancillaries, and in real estate, you have starting from housing finance companies to building material suppliers. So large basket to choose from for investors, and these could actually do well for a fairly long period of time.
What about banks and IT? You've largely both of you have actually let them out. You've not talked about them. I mean, is there a particular reason why, Abhishek, you would, because I think when this year began, there was a consensus estimate that perhaps banks have not performed, they will come back. Is that a hope, or are you going to be staying away?
See, my theory or the way I look at banking right now is, if you look at the commentary from RBI, right, for the last, say, 3 months, RBI has actually sounded caution in terms of retail credit growth. Now, when you have your regulator, sounding out caution, it means that it is the retail credit is going to get dampened for sure. right? So it is very unlikely that the banking companies will do extremely well, at least in the short term. There is going to be a lot of circumspection in these companies to ensure that the growth is much more certain, right? Of course, the counter side is you are getting companies like an HDFC Bank or a Kotak or I mean most of the top tier one, an SBI, just as an example, and definitely not any recommendations. You are getting these at probably reasonable valuations. So that's a toss up that an investor needs to make. IT, I think there is, other than some specific pockets of maybe ER&D companies, general IT services companies are going to see at least another couple of quarters of challenges before things probably start looking better.
Okay, just last word from both of you that I will ask. One, Kshitij, I want to understand from you. A lot of people would be also saying that, whether this could be an opportune time to exit or to book out some profits. So many investors may be sitting on 80-90% of profits with the kind of gains that we have seen over the last 1.5 years or not. So how would you really address that query?
Sakshi, so my sense is that people who are into sectoral bets, they can do some profits because there's a sector rotation which is going to happen. Cyclical stocks they are into, let's say PSUs have done very very well, so they can do that. That's what we don't buy. So I will not say. But normally, if you have good holdings with you and which have now giving you good returns, so you should not book profit because you are looking at maybe 2x or 3x in your portfolio. You might be ending up at 10x, 15, 20x also with these good businesses because businesses are not going to shut their shop because share price is going down or share price is going up. They're going to run. Share price moves up and down because of multiple reasons in the market. So just to give an example, there are more than 13 mutual funds whose NAV is more than 1,000. So normally a mutual fund starts with a NAV of 10. So there are 1,300 bagger mutual fund. So think about that when you have a holding which is doing right. So don't limit your imagination about that. That you should book some profits. So if you have some gold pen attached to some investment which is coming nearby in next 4, 5, 6 months time, and you have achieved the target price, then you must exit because maybe around the plan when you want the money, markets might not be as favorable as they are today. Otherwise, don't book your profits. Always book your losses. If you've gone wrong somewhere, you have taken a wrong bet, and you're still contemplating what should you do, then my request is that it's better that say a goodbye to that stock and maybe that fund or maybe moving to a better one.
Okay, book your losses instead and continue holding on to your good stocks because in the long run, in case you're looking at a story unfolding, there is a long way to go. What about you, Mr. Basu Malik? How would you really look at this thought process of whether one should really look at exiting?
So let me sort of, because probably this is coming to the end of the show. Let me go back to where we started. So I said when I started, Sensex was less than 4,000. So let's say a person gets in at a Sensex value of 4,000. By the time it is 7,500, 8,000, he thinks I've got 100%. Let me get out. And once you get out, it becomes much more difficult to get back in. Right? You'll have many psychological challenges of getting back in. And then you see what you've sort of left on the table. From 8,000, today it is at 75,000. Right? So but my question is, if you need the money, you can take it out. You should have a portfolio view, and it ultimately booking profits, etc., is a function of your time horizon and your the kind of risk that you want to take. Otherwise, if you have a very long-term horizon, there's no point in trying to sort of trying to time that exit and entry at a portfolio level. You can try to time entry exit at a stock level and sort of reshuffle your portfolio. But whether you want to book profits and get into cash, I don't know if that's a good idea, because my guess is we are going to see 1 lakh, 2 lakh on Sensex in the next decade and a half. So it's your call.
Okay, so Kshitij, next decade and a half, 2 lakhs is something that's coming in. But for fiscal year 2025, if I may ask, आगाज ऐसा हुआ है तो अंजाम कैसा होगा? आप बताइए, Sensex, where do you see by the end of this fiscal?
I really don't know. Really, whenever I have predicted, I've gone wrong. So, what Abhishek is saying is the right thing. That was eventually you will see that level coming. So that's what we have seen from levels of 100 in 1979. Sensex is at 75,000 today. It's
Yeah.
gone. Look at how many times it has gone up from 100 level 75,000. Nifty started from 1,000, it is at 23,000 almost, touching 23,000. So you have to give time. Compounding really works, but then you have to give time. So it's eventually like a good Hindi movie. Eventually the result is good, but then you have to give that 3 hours to watch that movie. You have to see that result happening your way. So idea is that last thing, whenever you invest, that investment should be aligned to a goal. Why people redeem? The reason is it's not that they are making losses. They book their profits also because they think that yeah, their job is done. When business is there, let's say for example, any company, Reliance, HDFC Bank, there's no reco, is there forever. Then why you want to be short-sighted in that company? When you buy a share of that company, you become a shareholder. But when you buy a mutual fund or PMS, also become a shareholder in a way, a minority shareholder. But then you should cling on with that business if you have a conviction in that business, and eventually it will make you big along with it. So rather than going for creating a fortune for yourself, look at creating a future for yourself. When you create a future for yourself, you will multiply your fortune number of times. But when you keep on looking for shortcuts, okay, I make 2x, I make 3x. So many of the people will like to redeem. There's a data point which has come. More than 52% people are only long on in mutual funds also. Many people are just redeeming because they thought 70-80% return is there. So what to do? How to get more returns? So I think you should give time to your investment, and if you are not full time into it, then better take a fund route. That my suggestion is.
Okay, wonderful. That's a great note to end this conversation at. Many thanks, Kshitij, and many thanks, Abhishek, for being with us on this show and helping all our viewers really understand the key factors pulling the markets higher and what's next coming up. One should stick to the goal-based investing, and of course, the markets are going to be going upward in the long run. So one should not be having a small vision, but have a long-term vision when it comes to compounding. That will eventually work for all our viewers. All those are key points that we have discussed. But do go on and listen to this interview again in case you're looking at some of the key fine prints in terms of the sectoral allocation and where are our guests really bullish on. So look for those points as well. Many thanks and congratulations yet again to both our guests.
Thank you.
Thank you. And with that, we wrap up this very special conversation. But do stay logged on to Business Today TV as we will continue to get you such fascinating conversations from the top market voices so that you can understand where should you be putting in more money to make more money in the markets.